While capital goods is a space that has been firing on all cylinders of late, the government support in terms of policy, infra push, big order flows as well as de-risking of the global supply chain away from China has worked wonders for the sector. But does the sector have the power to rally further? Well, that hinges on the sector's earnings performance and the consistent flow of orders. In the quarter ended March, on an average, the industry is expected to post revenue growth of nearly 16%, which is supported by strong order execution and record high order books across multiple companies. Cost-saving measures and operational efficiencies may drive a commendable nearly 14% rise in the EBITDA. However, the margin picture looks quite mixed, which we'll explore shortly. On the profitability front, however, a 17% jump is anticipated. While order flow has been robust in recent quarters, a slight bit of moderation is expected this time around due to the ongoing elections. Nonetheless, steady order inflows are projected in sectors like renewable energy, transmission and distribution, defense, as well as some others. Private investment, which has been selective so far, is also witnessing some green shoots. So overall, the order momentum may see a healthy uptick only from Q2 FY25 onwards. Export orders, however, are a bit of a concern given the sluggishness in most geographies, geopolitical tensions as well as trade disruptions. Now, against this backdrop, all companies are forecasted to achieve double-digit revenue growth this quarter, ranging between 13 to 25%. Margin projections vary. GE T&D, Kirloskar Oil as well as ABB India are expected to witness an expansion of anywhere between 1 to 6% in their margins. On the other hand, BHEL, Siemens and to some extent Thermax may experience some pressure on their margins. With the exception of BHEL and CG Power, net profits are expected to rise for all companies. Now, in terms of stock performance, capital good companies have been a very bright spot, with returns exceeding nearly 75% across the board in the last 1 year. Year-to-date gains range from 18% to an impressive 114%. However, these strong performances have in turn pushed the current valuations well above the historical averages. The question still remains, can these valuations sustain? Will there be another leg of growth driven by private capex? Only time will tell.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.